Florida's population boom has slammed into reverse. New projections show more than 275,000 people will leave the state in 2025, the sharpest exodus since the 2008 crash. Behind the sunshine, more than 275,000 people are projected to leave Florida in 2025, pushed out by skyrocketing insurance premiums up to $12,000 a year, plummeting sale prices, and mortgage payments that have doubled since 2021. In the past year, over 20% of investor properties have been put up for sale, many at double-digit losses. Palm Bay, where developers once bet big on the Space Coast boom, is awash in empty new builds. Over 3,200 unsold homes crowd the market. New construction prices, which peaked at $385,000 in late 2022, have tumbled to an average of $328,000, down 15% in less than 3 years. Builders are offering $40,000 price cuts, $25,000 cash incentives, and even temporary mortgage rate buydowns, but demand remains thin. Median incomes can't support monthly payments that now push $2,500 with taxes and insurance. Rental yields have dropped below 4.5%. Average rents are down 12% in a year, and vacancy rates keep rising, especially in sprawling new subdivisions. Northport, another pandemic-era hotspot, is seeing both house and condo prices slide. Single-family homes are down 5% year over year, condos nearly 9%. The city's rapid growth outpaced infrastructure, leaving many developments with limited services and rising costs. Insurance rates now top $4,000 annually, while property taxes keep climbing. Buyers are balking at total monthly carrying costs that stretch far beyond the mortgage. Inventory keeps climbing, and sellers are cutting prices by $30,000 or more just to compete. Lakeland, sandwiched between Tampa and Orlando, leads the nation in foreclosure rates, one filing for every 172 homes in 2024. That's more than double the national average. Home values are falling, and the city is labeled at very high risk for further price drops. The foreclosure wave is feeding a negative cycle. Distressed sales drive prices lower, pushing more owners underwater and triggering even more defaults. Investors who bought during the boom are now racing to unload properties before values sink further. Cape Coral stands at the epicenter of the crash. Home prices in the Cape Coral, Fort Myers metro, have dropped 11% in 2 years, the steepest decline of any major U.S. city. More than half of all listings in Cape Coral have had at least one price cut. Nearly 8% of homeowners are now underwater, owing more than their house is worth, the highest rate in the country. Inventory has exploded, with about 12,000 homes for sale in the market. Properties that sold for $675,000 3 years ago are now struggling to fetch $500,000. Investors who tried to cash in on short-term rentals are slashing prices by $100,000 or more just to get out. Local agents describe a market where incomes simply can't keep up. For many, the only way out is to sell at a loss or walk away. The correction here isn't theoretical. It's already wiping out equity and forcing families to make impossible choices. Cape Coral has become ground zero for the South Florida housing bust, a warning to every boomtown on the map. Texas and Arizona are now showing the same warning signs that swept through Florida just months ago. In Austin, active listings jumped 13% in the past year, while Dallas-Fort Worth inventory soared 31%. Houston and San Antonio are seeing similar trends, with inventory up 24% and 16% respectively. Across Texas, the total number of homes for sale reached 123,000 in April, 53% higher than the typical average, pushing the state's housing supply to its highest level in over a decade. Price cuts are spreading fast. In Dallas, 34% of listings have been reduced, and in Austin and San Antonio, it's over 30%. Statewide, nearly 28% of all homes on the market saw at least one price drop in April. Arizona's housing market is cooling even faster. Greater Phoenix home prices have dropped 6.9% from their 2022 peak, and the average home now sits on the market for 79 days. Active listings in Phoenix climbed past 25,000 in July, a 36% year-over-year surge. New listings are down, but homes are lingering unsold, echoing the inventory buildup seen in Florida. Across the Sun Belt, inventory-to-sales ratios have stretched to 9 to 12 months, and pending sale cancellations are up to 15%. In San Antonio, Memphis, and Jacksonville, buyer activity has dropped by double digits, according to Zillow's Market Heat Index. With mortgage rates hovering near 7%, buyers have more leverage, and sellers are increasingly forced to negotiate. The ripple effect is clear. The forces reshaping Florida's market, rising supply, cooling prices, and shifting power to buyers, are now playing out in major metros across the Sun Belt. Home buyers in 2025 face a market that is finally tilting in their favor. But every deal demands sharper scrutiny. With inventory at record highs and sellers slashing prices, buyers hold more leverage than at any time in the past 5 years. Negotiating for seller-paid rate buydowns, closing cost credits, or even a year of homeowners association dues is now common, especially in cities where homes linger unsold for months. But lower sticker prices are only part of the equation. Carrying costs, insurance, taxes, flood coverage, and homeowners association fees can easily add $800 to $1,500 a month on top of the mortgage. For older buyers or those on fixed incomes, it is essential to request a full breakdown of all ownership costs before making an offer. Reviewing association budgets and reserve studies is non-negotiable in the condo market. Buildings facing major special assessments or with underfunded reserves can drain savings fast. Ask for documentation of upcoming repairs, insurance renewals, and any pending assessments. In flood-prone suburbs, verify the exact flood zone and get a quote for both property and flood insurance. Premiums can vary by thousands, even within the same zip code. Investors should run updated cash flow models that factor in higher vacancy rates, falling rents, and rising insurance. Leverage is a double-edged sword. While price drops create entry points, negative cash flow can wipe out gains if the downturn drags on. In this market, due diligence is not optional. It is survival. Every buyer should build a checklist. Confirm all monthly costs, scrutinize reserves and assessments, and negotiate every possible concession. The smartest move in 2025 is not just finding the right price. It is making sure the numbers work long after the closing table. In 2024, South Florida saw a 34% surge in housing inventory and a projected 275,000 residents planning to leave the state by 2025, according to state and real estate records. Across 15 cities, documented price drops, insurance premiums rising from $8,000 to $12,000, and a collapse in investor activity have reshaped the market. The documentary revealed policy changes like FEMA, flood zone expansions, and new condo reserve laws as direct causes of cost spikes and sales declines. Despite clear data on outmigration and financial strain, the long-term effects on local communities and recovery timelines remain uncertain, as several legislative reforms are still under review. What is clear? South Florida's housing market has shifted from a pandemic boom to a sharp contraction, with ripple effects now visible in other Sunbelt states. For buyers and investors, the evidence points to the need for careful research and a close watch on ongoing market changes.